Ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the dollar versus Swiss from a technical perspective, so let's get going. I'm going to start by taking a look at the weekly chart. Why? Because the dollar versus Swiss moved to the lowest level since January of 2021, over 2 years ago. And that low price that we saw in trading here today tested some key levels going back to 2020, 2021. And I'm outlining those levels right here. You see all these lows right through here on the weekly charts. They stalled between this level between 0.8922 and 0.888. 379, 0.8822, 0.88379. The low price this week reached just below those levels at 0.88193 and rotated back to the upside. So fell below those levels by 3 pips. Let's take a closer look at it. You can see all these lows right here. Now, the market back here in 2021 did move below those levels on these 2 weekly bars, but notice also that the price did not close below those levels. So this area was a key level, and the market tested this week. The market found buyers, some profit taking perhaps. After all, the price has been moving sharply to the downside since the end of February, around 600 or so pips to the downside in a couple short months. So that gave the buyers the opportunity to buy low and see what happened. And you can see that the price has indeed moved to the upside, and we moved up to a high today of around 0.8973. That got close to the low of these swing low levels. These swing low levels come between 0.9000, let's call it 90, and 0.90178. So we had a 73 high, 90 level, 90.178. Those are the targets on the top side that we need to get to and through if the buyers are to take more control. Otherwise, we're just in this bottom range right here on the weekly chart, and we could see further downside potential for this pair. That's on the weekly chart. Now, let's take a look at the hourly chart, because that'll give us shorter term clues for this currency pair. And so if we take a look at the hourly chart next, this is what the price action looks like in trading here today. And this week, for that matter. And what we can notice here about the lows that we saw, remember that we had that low off of the weekly chart that was near the 22 level, and you can see that the price moved down just below that level, but stalled. You can see the buying effort at that level, and eventually the market did move higher in trading yesterday. Now the price action was up and down, volatile, and we did get another move to the downside in an early Asian session in trading here today. But then we started to see the build to the upside, helped by CPI data in the Switzerland, which came in at 0.0% today, which helped push that pair to the upside, the Swiss franc to the downside. But what we saw here from a technical perspective is something really key that's going to dictate our trading going forward, and that is a 200-hour moving average held support here for a number of different hours before rotating back to the upside. That 200-hour moving average is now going to be a risk-defining level for traders. We're trying to look for a switch in the bias, perhaps a move back to the higher levels that might come up to test the 90.18 level. Remember that off the weekly chart. That also corresponds with the 50% retracement of a recent move to the downside. So this is going to be our key target on the top side, not only from the weekly perspective, but also a level that is important here on the hourly chart as well. But in order to do that, we need to hold the 200-hour moving average, and you might even say the 100-hour moving average. That's our risk-defining level. As long as the price can remain above these levels, the buyers are still in play in the short term. They have work to do. They need to get above this high price at 90.20 in order to push this price further to the upside and continue the corrective move from the February move to the downside on the weekly chart. But you got to start somewhere, and the start somewhere is above the 200-hour moving average. That's a key level going forward here for traders, for you and for us. So as long as the price can come down, test that level, and see a rebound back to the upside, that's what we're going to be looking for in the dollar versus Swiss. If it goes below these levels, all bets are off, but look for support down here against 200, against the 100-hour moving average. My name is Greg Mikulowski. Good fortune through trading. Bye-bye now.